Hello, and welcome to this webinar on Vintage Payroll Practices 2025. My name is Henrik Wallgren, and I'm the Business Services Manager with the South Australian Wine Industry Association, based in Adelaide. We're the peak body for the wine industry in South Australia, and one of our key roles is to provide advice and assistance and services to wine industry businesses in relation to employment relations, human resources, work health and safety, liquor licensing, and a lot more. The webinar this morning will run for about 90 minutes, and it will focus on employment relations and employment practices of a vintage, particularly in relation to the Wine Industry Award. Before I start, I just need to highlight that the information in the presentation is current as of today of the recording. It is intended to be general in nature only. It is not legal advice. The information in this presentation is provided on an as-is basis. So as things change, as legislation is passed or regulations are amended, obviously you need to take that into account. And all the information contained in this presentation and in the slides is protected under copyright. So in terms of the agenda, we will focus on legislation and compliance. So look at the various bits of regulations and employment law that applies to employers here in Australia. We'll then move on to modern awards with a particular emphasis on the Wine Industry Award. We'll then give examples and key points of the Wine Industry Award and key considerations, looking at practical aspects of the award as it relates to, for example, to rostering, to meal breaks, and then do a general wrap up and some overall considerations that you should take into account, including migration and outsourcing practices. Why should you be compliant? Well, obviously, it's the law. And if you don't follow the law, then you may be subject to fines. But also there are other sort of considerations that are equally important. And one of them is the reputation of your business and industry. So we know there are some very real reputational risks for business owners and investors associated with wage underpayments. And we are very familiar with well-publicized stories, media stories about major companies having been found to be non-compliant and having been involved in underpayments. I don't think this is very good. Okay, I'm going to pause this. So why should you be compliant? Well, number one, obviously, it's the law. And if we don't follow the law, we may be subject to fines and penalties, which can affect both the business as well as individuals. Secondly, it's about the reputation of your business and industry. We know that in the wine industry, brand reputation is crucial. And having been found to be non-compliant, to be involved in underpayments, can really hurt your reputation and can damage your brand. So that's the second reason. But the third reason is that for environment, social, and governance ESG purposes, we know that consumers are looking at the ethical practices of businesses. We know that buyers, such as major retailers, whether in Australia or overseas, are also taking the ethical practices into account in deciding whether they want to purchase the products to start with. So this is obviously very, very important, and it's quite common when you supply your goods to major retailers that you're subject to audits, and obviously if there would be non-compliance or breaches, underpayments, or other issues, your main customers would want to know that, and it could affect your business standing. So that's another reason why compliance is crucial. So in terms of the employment category, starting from the top, we have the legislation, meaning that the Fair Work Act applies. This is the key legislative instrument that applies to employment across Australia. It sets the core entitlements, including leave, for example. And a major aspect of the Fair Work Act is the national employment standards. And they are, the key employee entitlements, as we said, leave, annual leave, personal leave, public holidays, minimum wages, and so on. So if you decide to get a copy of the Fair Work Act, then look at the national employment standards. They are the core. But there's also obviously a number of different aspects of the legislation which may not be as relevant to you as a business owner. Underneath legislation, we have enterprise agreements and awards. Enterprise agreements are essentially industrial instruments applying to a single business. So it means that the business and usually unions bargain for an outcome, and then that gets recorded in an enterprise agreement, which is voted on by staff and then subject to approval by the Fair Work Commission. Once it's in place, it sets the minimum entitlements and the rules for staff within that workplace. In the wine industry, we don't have too many enterprise agreements. It's only about 50 nationally, so it's relatively rare. They tend to be focused on the larger employers in the industry. Having said that, there's obviously no ban on smaller businesses engaging in enterprise bargaining. More common is that employees derive their entitlements and minimum conditions from the relevant award. And obviously, there are a number of awards that apply. There are 120 plus awards in the country, usually applying on an industry basis, but can also apply on an occupational basis. We then have contracts of employment. And the contracts of employment is something that you have with individual staff members. They are the middle ground between, I guess, broader employment regulations and your business. So they set, I guess, the rules, the conditions for individual staff members. So, for example, if you decide to offer, a wine allowance or a bonus, or you want to prescribe particular working hours, or you want to give entitlements or conditions which are different from, say, the legislative minima. So, in other words, you want to do more, for example, then you would want to have that recorded in an employment contract. There might be rules that you want to set in terms of external employment. There might be particular duties that you want to remind staff of. Then they would be very good to put in an employment contract. There is no law which says that you need to have a written employment contract, but it's a good idea because it formalizes the relationship and it makes it clear to both parties. It removes guesswork. So other aspects of the contract that you would want to address is obviously employment category. Are you permanent, part-time, full-time, casual, number of hours, etc., etc. What we have here is a summary of all the different aspects that we are dealing with when employing staff. And you can see there is a lot, ranging from legislation to policies. And if we start from the top with the legislation, this is the Fair Work Act, which is the key employment law that applies to employees in Australia. Generally, it sets minimum conditions of employment, but it also provides the overall framework. It sets out the different bodies that are relevant in the employment space, the Fair Work Commission and the Fair Work Ombudsman and others. When it comes to the Fair Work Act, what I would say is of main relevance to you as an employer is the National Employment Standards, which is the core conditions of employment that employees are entitled to. Underneath legislation, we have enterprise agreements and modern awards. Enterprise agreements are essentially industrial instruments that apply on a company level. So companies decide to negotiate an enterprise agreement with their staff. It can be with unions or without unions. And it's really about providing terms and conditions, working conditions, practices that are most suitable to that individual workplace. And when the enterprise agreement applies, it applies generally instead of the applicable award. And an enterprise agreement has to be voted on and approved by the Fair Work Commission. They're not that common in our industry. We have about 50 enterprise agreements overall nationally in the wine industry. Far common is for employees to derive their entitlement in terms of conditions by modern awards. And there are 120 plus awards applying both sort of on an industry level as well as an occupational level. Of greatest relevance in our industry is the Wine Industry Award, and we will obviously focus on the Wine Industry Award in this presentation. Contract of employment. So here you can add additional provisions that are binding between the employer and the employee. So it can't be less than the legislation. It can't be sort of less notice or less leave, but you can do more. You can, for example, provide rates of pay which is higher than the award. And if that is the case, the contract would explain what the high rate of pay is paid in satisfaction of. You may have specific rules on outside, external employment, for example. You may want to remind staff of confidentiality and of commercial arrangements. There might be provisions that are greater than, for example, leave provisions that you want to address. And importantly, you wanna specify the basis of the employment. Are they full-time or part-time or casual? Is it a fixed-term contract? And are they covered by an award, and which award applies? Um, Looking at also position descriptions and policies, this is sort of the middle ground or gateway between sort of the broader regulation. So it's quite a good idea to have position descriptions which sets out the responsibilities of uh, of the employee, like the roles, what is covered, what are the tasks and duties, and so on. And it's not so much to have that as sort of as a list that employees can use to say, well, I'm not going to do that because it's not in my position description. It's more about making it clear, setting expectations. If employees have clear expectations, they're obviously much more likely to be successful and are able to perform in accordance with your expectations. Policies are also rules on a company level, and it could be policies on annual leave. For example, how would you want employees to apply for leave and when to apply for leave? If staff members are absent from work, what is the practices then to notify their manager of their absence? It could be policies on wine allowances, when is it paid and how much is paid. It could be policies on alcohol and drug testing, which is really relevant, obviously. So I would say, there's very much specific rules you want to keep in a policy as opposed to an employment contract. The reason being is that employment policies can be amended, and they can be amended by the employer. It might be a good idea to have consultation, but it doesn't require employee approval. Whereas amending a contract is a contract between two parties, and therefore you can't unilaterally change a contract. So if you put in conditions in a contract and you need to amend them, well, you need to negotiate a change with the employees. And also keep in mind that once you put provisions in a contract, they're binding on both parties. So if you set out a very detailed process for performance management or termination, it means that you are required to follow that too as an employer. And if you don't do that, you're in breach of the contract. Whereas policies, you have more flexibility. They're more like internal guidelines to employees, and you expect employees to abide by those policies. And if they don't, you can then performance manage staff. I also want to just highlight some recent developments. And we've had a decision in the federal court in relation to Woolworths and Coles versus FWO in 2025. Um, and this case was centering around annualized salaries. And it was about the extent to which an annualized salary for award covered employees, whether it can set off award entitlements, and also the basis that you are able to compare the annualized salary with award entitlements. And what the case held in Woolworths was that you can't do an annual salary and just do, say, a reconciliation, a comparison of what you are paying against what the employee would be entitled to under the award, and just say compare that over 6 months or over a year. The case held concerningly that you need to ensure that in each pay period, what you are paying the staff member under the annualized salary is at least the amount they would receive if they worked strictly under the award. So if they're being paid weekly or fortnightly, it's a weekly or fortnightly comparison. And if there is a shortfall in a fortnightly pay cycle or in a weekly pay cycle, that shortfall has to be addressed in that pay period. So you can't really apply a swings and roundabouts approach, which has been the purpose of annualized salaries. It gives you predictability, it gives the employee predictability. It means that over a year, taking all the working hours into account, they are better off overall. And we don't need to individually look at each pay period. You've obviously done the modeling, and you know in some pay periods the employee is better off. In some pay periods there might be a shortfall, but overall it evens out. The court has said that that sort of evening out over 6 months or a year, that's not permissible. We need to ensure in every pay period under the annualized salary, they're better off overall. So this is an issue. To complicate matters, we had a decision earlier in the year in Corporate Air Charter versus Australian Federation of Air Pilots, a different decision, which said that it is permissible. You can actually look at annualized salaries, and you are able to offset that over multiple pay periods. So we have two apparently conflicting decisions, which is a real problem. We were hoping that there would be appeal, given that this apparent contradiction between the two cases. It doesn't seem like that is happening. So I would say act with caution. Don't tear up your existing contracts, and don't overhaul your payroll software at this point. There is one learning which I would recommend that you do implement immediately, and that is ensuring that for award covered employees who are working hours that under the award would be entitled to overtime and penalty rates, there is a need to ensure that is taken into account for employment record purposes. So those hours need to be recorded. You need to keep sufficient employment records. That is absolutely crucial. It's not sufficient to just record kind of working hours, but not record hours that do attract penalty and overtime rates. It's not sufficient just to have sort of a clock in and clock out system. We need to know which hours they were working that would attract overtime and penalty rates, and that is to ensure there is capacity to basically inspect and compare the annualized salary versus the payments they would receive where they are paid strictly under the award. So what we are saying is, ideally, if you have awards which provide for annualized salaries, abide by those. And there aren't too many awards which unfortunately provide that. So the Clerks Private Sector Award, there is an annualized salary provision. In the Restaurant Award, there is an annualized salary provision, and they do allow for basically 6 monthly reconciliation. which is a good thing. So if you have awards with annualized salaries, then use those. In the event the awards do not, and the wine industry award do not allow for that, then my advice would be to going forward look at how we can structure the salary differently. So start doing comparisons. Look at in the past year, for example, do modeling. Look at were the instances of pay periods where the annualized salary was not sufficient to cover off the entitlements in that pay period. Look at the number of instances and then have a think about how can we restructure the annualized salary? What can we do differently? Are we able to, for example, ensure that employees in each pay period will always get the award? And if that approach doesn't result in the employee getting a level of compensation up to the annual salary that has been agreed to, then obviously there would be a possibility to, at the end of the year, provide so that the remaining payment as a bonus. So can we structure it to paying staff under the award in all instances, but then end of the year we provide sort of an annualized bonus? Or can you have instances where under the winter season you pay under the award, and then for the remainder of the year, where less likely to be working overtime or attracting penalty rates, you are then paying sort of an annualized salary. So maybe we need to split this up. Just to reiterate, record keeping obligations, that is crucial. So if they are award covered, you need to record hours that would attract overtime and penalty rates. If they're truly award free, then you don't have those same record keeping obligations because award free employees are not entitled to overtime and penalty rates. Um, And also, if they are truly award free, then this case has really no relevance because award free employees, as I said, aren't covered by the award as is obvious, which means that they're not entitled to award entitlements. Therefore, you can set an annual salary, pretty much just on the basis of market rates. So we talk about, say, cellar door managers. We could, for example, winemakers, viticulturists, vineyard managers, they may well be award free. Moving on to awards. So as I said in my introduction, there are about 120 plus awards, and it can be rather difficult to navigate which award is applicable in each circumstance. And as a sort of a general piece of advice, I would say don't be sort of tricked by the name of the award. So the name of the award may imply it has coverage, in effect, when it doesn't. And conversely, the name of the award may suggest or may not be apparent that it actually applies in your workplace when in fact it does. So if we look at the key awards, obviously the Wine Industry Award is the number one award that applies in our industry. And awards can apply on an occupational or industry or a hybrid basis. So industry awards means that it is covering the workplace if that business is within that industry. So for example, the Wine Industry Award, you're a wine producer, you're covered by the Wine Industry Award. If you operate a restaurant, then you're a restaurant industry business, and you can be in multiple industries. And so they are sort of the traditional industry awards. We have occupational awards. One of them is the Clerk's Private Sector Award. So it applies on an occupational basis. It doesn't apply on an industry basis. So if you're a wine business and you employ a receptionist or a bookkeeper, or if you are a restaurant and you employ a bookkeeper or a receptionist, the Clerk's Private Sector Award applies. So it basically applies unless there are clerical classifications in your relevant industry award. We also have awards which apply both on an industry basis, on an occupational basis. So the Manufacturing and Associated Industries and Occupations Award, quite a mouthful, is both an occupational and an industry award. That means that businesses that are, say, in metal fabrication, a welding business, a boiler making business, if that's the right terms, they sit within the manufacturing industry. A business which manufactures widgets of steel, for example, making tools, would be covered by the manufacturing industry award. But it applies on an occupational basis to maintenance people, for example. So if you're a wine business and you employ a electrician or you employ a welder or a boiler maker or trade qualified maintenance person, the manufacturing and associated industries and occupations award does apply. There are also a number of other awards that has coverage in our industry. The Commercial Sales Award is applicable to sales reps. Miscellaneous Award, a bit of a funny name. It basically means as the award of last resort for traditionally award-covered employees. So it's not one which captures everyone. It's an award which captures staff that generally are not highly skilled. They're not professionals. It could be, cleaners. If you employ your own cleaner, then the miscellaneous award is likely to apply. If you employ your own gardeners, groundskeepers at the winery, there is industry awards, but they wouldn't apply here because you're not in the sort of in the commercial gardening space. You employ them in-house, in which case the miscellaneous award may apply. It can be tricky, as I said, to work out which one is which. And SAWIA members, please get in touch with us. We're very happy to work with you to identify, firstly, is the award applicable? But secondly, also then looking at are your individual staff members captured or not? And on that point, there are people who are award free. And award free means that either there's no award which applies to that particular role or that particular industry, or it may well be that yes, there is an industry award which applies, but that individual staff member is not captured by the award because they are working at the level which sits outside the top classification. The first steps, as I said, in terms of award coverage, and now looking at the wine industry award, is to decide who is. The first step is to work out coverage. So we look at the wine industry award. Who is covered? Well, employers in the wine industry, and there's a definition of what the wine industry means. It means, making wine, picking grapes, growing wine grapes. The second step is to look at employees in the classifications within the award. So are the individual employees covered? So in terms of industry coverage, growing and processing of wine grapes, producing and handling wine products, and the warehousing and distribution of those said products. It's also important to just be aware that if you get labor hire businesses providing staff to you, those businesses and those employees are also covered by the award if they perform work which sits within the award. So common roles covered by the award is vineyard workers and vineyard hands, cellar workers, cellar hands, cellar door salespersons, warehousing and distribution staff, packers, bottlers, and lab attendants. In the wine award, we have streams and classifications. And those streams are bottling, cellar, cellar door, lab, vineyard, and coopers. So the top ones are used frequently, coopers less so. A key point I'd like to make is look at the grades first and look at the description of the grades to determine, not so much decide, but to determine whether an employee is covered by the award or not. Don't be guided by the wage. So sometimes there is a assumption that if you're paying above, they're not covered by the award, uh, which is actually not the case. So the salary or the wage doesn't determine award coverage. It's the opposite. It's the grade and the classification which determines the award coverage. So if you work through the coverage clause, the particular grade, and comparing it against the work that an employee is doing, if they're clearly captured, they're clearly captured. They're covered by the award. If you are paying a salary or a rate of pay which is substantially higher, that's an over award payment. It doesn't take them out of coverage. Having said that, if you pay someone a salary which is, double or three times the award rate, I mean, it could be an indication they are operating on a more senior level, but it's only indicative. It doesn't determine. We still have to work through the grades. And generally speaking, we have grades from 1 to 5, and I say generally speaking because the 1 to 5 applies for really all streams apart from the cellar door. So cellar door only goes up to grade 4. And grade 1 is an entry role. It is maximum 12 months within that role. It is subject to a 3-month sort of induction period or training period. Grade 2 is also the entry role, but you can remain within that grade for a maximum of 2 years, 24 months. And grade 3 is the next step. So time-based for grade 1 and 2. Grade 3 is not time-based. Once you reach grade 3, you can remain at grade 3. And grade 4 and 5 is more about sort of experience, working without supervision and having sort of more of a sort of leadership type position. A question that we get asked, particularly around vintage for vintage casuals, is can you have a grade 1 employee um, returning as grade 1? A key question that we get asked around grade 1, particularly around vintage, is can you have vintage casuals returning at grade 1 for subsequent years? In other words, can they be at grade 1 for more than one vintage? The answer is, well, it's actually not clear cut, but in our view, it is no. Reason being is that grade 1, if you look at grade 1, it makes it very clear that it is an introductory rate. It is for someone who doesn't have experience. It sets 1 year as the maximum. It also makes it clear that you have to put through employees for sort of a 3-month training induction program. So the assumption would be if they've done that 3-month sort of induction program, then they would have acquired the skills to be able to perform. I would say that you need to, if you are looking at bringing someone back at grade 1, you need to be confident that you have enough basis to argue your case to the federal ombudsman, because they may well look at and determine that the employee has worked with you before or has worked in the industry previously, and they would ask you on what basis I then pay them as grade 1. If you can demonstrate that they did a very short stint with you, they only did a week or 2 weeks or maybe only a month, maybe you could justify that. But if they done a whole vintage for you and you bring them back next year, I think that would be risky. Secondly, you're fighting over talent, and if you have someone who's experienced, it is highly likely that other employers would offer grade 2. So you are also potentially putting yourself in a competitive disadvantage by offering a salary which is lower than what other businesses are, but also a salary which arguably is not compliant with the award. So that's the risk. What happens if an employee makes a complaint? So employees, if they believe they're being underpaid or not receiving the right entitlements, they're entitled to seek advice from the Federal Ombudsman, and you may then get contacted by the Ombudsman asking for your input and information. If that happens, reach out to us as a SAWIA member. Very happy to assist you. As a non-member, we can also work with you on a consultancy basis. Things that you need to ensure is that you have sufficient records, that there are time and wages records, that there are employment contracts. They are things that the ombudsman would look at. The fact that you are issued time wages, wage pay slips, sorry, would be something the ombudsman would look at as well. So if we put the wine industry award classification into practice, the following slides gives you an illustration of how that could work. So in this case, we have a vineyard hand, Brienne, who is employed in a casual capacity. Of the last 3 years, she's built up some experience doing vintages for local businesses, about 12 months experience altogether. And the winery doesn't know whether it should employ her as grade one or grade two. She's not particularly skilled in a vineyard, and she will be doing most forms of work under direct supervision. Um, so the question is she a grade one or grade two? And importantly, if a fair work ombudsman inspector came on site, what would they conclude? So the rules. The wine award says that you can't be a grade one for more than 12 months. Not including the time in between vintages, Brienne has worked 12 months cumulatively in a local wine business, and therefore she must be grade two. And once we know the classification, we can then look at what the minimum wage is for the classification in the modern award. So let's go over the basics. Increases to awards occur from the first pay period starting on or after 1st of July. Once we know the classification, we can then look up what the minimum wage is for this classification in the modern award. So let's go over the basics. Increases occur from the first pay period starting on or after 1st of July. And if you look at grade one, you see that there are two rates, one for less than 6 months and one for greater than 6 months. This is a change from January this year. The Firework Commission introduced a new pay point where any grade one employees must move up to the second paying point after 6 months of employment. And this comes from pardon me, a broader review of introductory rates. So it applied across multiple awards and had been going on for a very long time. So it means that you need to be able to manage for grade one employees if they work with you for more than 6 months. The fact that they are entitled to a pay revision. I wouldn't necessarily say a pay increase because it's not on the basis of it's not on the basis of performance, but they move up to a higher pay point. Employment categories. We have three employment categories in the wine industry award: full-time, part-time, and casual. And obviously, full-time, guaranteed employment, minimum 38 hours per week. That is what you are basically locking yourself in to provide. They're entitled to paid leave. They have a obviously set hours. Um, the part-time clause is also permanent employment. That's why it's being referred to as permanent part-time pretty commonly. So it's to provide permanent employment for less than 38. But also be aware that a part-time employee can work up to 38 hours per week. So it basically means that ordinarily they're working less than full-time, but at times may work longer hours, and that's perfectly fine. They're entitled to paid leave, but on a pro rata basis. And importantly, they need to have a pattern of work. So they're not casuals who can just be kind of rostered whenever you need them. You have to agree at the time of arrangement on a pattern of work that you stick to. It could be number of days per week they're going to be working. It could be number of hours that you guarantee per week. Whether you say, oh, you are working, I don't know, 21 hours per week or 3 days per week or Monday, Wednesday, and Friday, and they are the guaranteed days. So they are the guaranteed days that you need to be able to provide. If you are offering additional hours and the employee accepts, that is fine. And those additional hours are worked as ordinary hours, obviously provided they still fit within 38 and they still fit within span of ordinary hours. So part-timers can be rostered or they can be offered to do more work in the wine award, and overtime is not payable for those hours as I said, as long as they sit within 38. Other awards treat it differently, so it's actually quite flexible. Also important to note that part-timers don't have, a set minimum engagement under the award. The award doesn't say that the part-time employee has to be rostered 15 hours per week or has to be given a minimum of 2 days. So you could technically have a part-time employee who work 1 hour per week, or 1 hour per day, or 2 hours per day, or 10 hours per week. That is entirely up to you and the part-time employee to agree on at the time of employment. Casual employees, differently, they have no guaranteed hours. They employed when needed. There's no paid leave in terms of annual or personal leave, but they instead receive 25% casual loading. You wouldn't give casual employees a pattern of work. So I think that's important to keep in mind. You don't want to lock yourself into or guarantee, because once you start guaranteeing hours, you create an expectation on ongoing employment, and we then have arguments whether these are actually casual employees or permanent employees. Having said that, can you give casual employees rosters? Clearly, they want to know that, and you also want to know with some advance notice whether they will be available or not. But it's not a guarantee. It means that hours can fluctuate. It can be times where there are no working hours. It can be times where the casual employee does not work. So it works in both ways. You are entitled to apply it flexibly and have non-working periods, but so is the casual. Casual, if they're not working, they don't have to apply for leave because there is no leave. You probably want to know whether they're not available for a couple of weeks or a month, but they don't have to. You don't have to. They don't have to take leave, and you can't performance manage a casual employee for knocking back hours. That's part and parcel of the employment. Importantly, with casual employees, when they are rostered, you are required to give them a 4-hour minimum engagement. So there are limited circumstances where a less engagement is possible. There is provision in the award that if there are significant weather events that basically prevents the work from occurring, then in those instances, you are able to provide a 2-hour minimum engagement. Also important to keep in mind that if you are offering 4 hours, if the employee wants to leave early, that's fine. They can do that. It is their choice. You would record it on the timesheet, and obviously you pay them up to when they leave. So if they leave after 2 hours, that is their choice, as long as you made it clear that you are offering 4 hours. If they go home because they're sick, once again, you had 4 hours that you were willing and able to provide, but the employee was unable to complete those hours, in which case you get it recorded once again so you have it as evidence. Moving on to the key aspects of the wine industry awards, what are the key points to take note of the award as it applies to vintage? So we will look at ordinary hours, we will look at shift work, we will look at breaks, overtime, time off in lieu, callback, and flexibility clauses. So if we are looking at ordinary hours, so ordinary hours is made up of two key factors: the total hours worked in a week or a day, and the days of the week and times of the day. So if we look at the total hours worked in a week, we know that the maximum ordinary hours that can be done in a week is 38 hours. It's actually an average of up to 38 hours per week. So the word average points to that there is capacity to have some kind of averaging arrangement. So, for example, allowing an employee to average out their hours to 76 hours in a fortnight, thereby enabling an employee to work more than 38 hours, 38 ordinary hours in a particular week, provided they work less the second week, or vice versa. Ordinary hours must not exceed 10 hours per day. So that's the maximum ordinary hours you can do in any day. However, there is capacity to have an agreement between the employer and the majority of the employees in the workplace or in the section of the workplace to do up to 12 ordinary hours in a day. So we have the maximum hours per day or per week, but we now also need to look at the days of the week and the times of the day. So that's referred to as the span. So the span ordinarily in the wine award, I say ordinarily because there are some exceptions. Ordinarily is Monday to Friday. That's the overall span. And the times are between 6 a.m. to 6 p.m. That is the general span. It means that we can work to 38 hours within those time frames. That is sort of the boundaries of how 38 hours can be arranged. And this is important because the span or the ordinary hours, the boundaries around ordinary hours, that decides also what is overtime, and we will get to overtime specifically. Another consideration too is that hours may be ordinary hours, but they can still attract a high rate of pay through penalty rates. For example, it's quite common if you do weekend work that you get a penalty, a Saturday penalty or a Sunday penalty. And the logic behind that is to compensate staff for, for the inconvenience, as it says, to working sort of unsocial hours, working hours that otherwise would be days off. We also have shift penalties. So for shift workers, they get shift penalties when working shift, and that is compensation for working hours that are outside the span of a day worker. And overtime rates that apply any time that the hours are not ordinary hours. It's important to understand the difference between ordinary hours and overtime hours. So ordinary hours, they do attract leave accruals, and ordinary hours are deemed to be ordinary time earnings for the purposes of superannuation. So those hours are attract superannuation contributions. Whereas for overtime, there's no leave accrual on overtime. And importantly, overtime hours are not ordinary time earnings, which means that superannuation is not payable on such hours. So we put together a table summarizing ordinary hours in the Wine Award. We're just looking at day workers now. There are some special conditions depending on the classification stream and time of the year. Firstly, it is important to note that for cellar doors, the span is different because cellar doors are operating on weekends, so that's taken into account for the purposes of ordinary hours. So Saturdays can be worked and Sundays can be worked in ordinary hours between 8 a.m. and 6 p.m., then with the payment of a penalty. If we look at bottling, we are limited. Bottling labs, cellar production, and warehouse, it's limited to 6 to 6 Monday to Friday. So even during vintage, you can only work ordinary hours in the cellar Monday to Friday. If they work weekends, that is automatically taken to be overtime. For the for the vineyard, you will see that we have two different sets of ours. We have vineyard non-vintage and we have vineyards vintage. So the vineyards non-vintage, we are limited Monday to Friday, 6 to 6, whereas vineyards over vintage, the hours change from 5 a.m. to 6 p.m. And importantly, you can do Saturdays in ordinary hours with a payment of a penalty. So it may seem somewhat illogical why vineyard workers can work Saturdays, but cellar workers can't. And a lot of that is custom and practice, history, previous, award conditions and the like. So they are the rules that we got to play with. There is a definition of vintage. I'm not going to read that. It is set out in the award. So as I said, cellar doors, Saturdays and Sundays are overtime hours, sorry, are ordinary hours with a payment of penalty rates. And for the other streams, Saturdays and Sundays is deemed to be overtime. Vineyard over vintage. Saturdays is ordinary hours, but Sundays is still overtime. Um, and also in relation to ordinary hours, the award sets out different methods for arranging the 38-hour working week. It lists three options, and that is to have 19 days at 8 hours in each four-week period with a roster day off, to have 9 days at 8 hours and 1 day at four hours in each fortnight with the roster day off, to have 4 days of 8 and 1 day of 6, or it can be any other arrangement as agreed with you and the majority of staff. And a common arrangement would be 5 days at 7.6 hours. So I would say the most common arrangement is either to have 4 days of 8 and 1 day of 6, so have the Friday at 6 hours, or have Monday to Friday at 7.6 hours is the most common one. Odd roster days off, RDOs, some businesses employ them. They can work well, but they can also create quite a lot of challenges if not managed very carefully. So we moving on to shift work. So we've covered day work. Shift work is also quite common in our industry, particularly during vintage. So shift work is unique in that it involves hours of work, and they still ordinary hours, but they fall outside the span of ordinary hours for day workers. So what is considered shift work? There are three different types of shifts. One is afternoon shift, and that is a shift finishing after 6 p.m. and at or before midnight. We have a night shift, which is finishing after midnight and at or before 8 a.m. And then we have a permanent night shift, which is a night shift, but all basically all shifts within are worked as night shifts, or it goes for more than 4 weeks, and it doesn't rotate to leave at least one third of the night shift. And the reason why the permanent night shift is relevant is that a higher penalty is payable. So when is a shift a shift? Well, the award is not that prescriptive. Some awards are highly prescriptive when it comes to shift work. It says that the shift has to go for more than X number of weeks, and you have to provide shift rosters these many days in advance, and so on and so forth. The wine award doesn't do that, so it provides more flexibility. Uh, but a key aspect of it is that it has to be structured and planned. It can't be a retrospective determination. So it can't be that you just let employees kind of work different hours and then you kind of work out which one is the most cost effective one. And if it turns out that in this instance a shift work is more cost effective, you treat them as a shift worker. You have to decide beforehand whether they are going to be a shift worker or a day worker for that particular shift. So employees can work a combination of day shift and shift work. Perfectly fine. They can be day workers for some days of the week, and other days of the week they can be shift workers. The award doesn't prevent that at all. But you need to let them know that if they are working a shift, it has to be rostered as a shift, and they need to know beforehand that it is a shift. And obviously you need to understand whether this is an afternoon shift or a night shift. And it's important because there are different rules applying to shift workers. So there are different, for example, break arrangements for shift workers compared to day workers. And also important to know that if you have a worker is rostered to perform work and finish at 5 p.m. and they end up staying back and working until 6:30. So if you look at the afternoon definition, it says is any shift finishing after 6 p.m. The fact that they ended up staying and working until 6:30 does not retrospectively turn it into an afternoon shift. It doesn't convert it to, to shift work. If they were engaged and they were rostered to do a day shift, ended up working later, that is overtime. Still a day worker, but with overtime. On the other hand, if you set out that they would be working until 6:30, that was the plan, then yes, that's shift work. I would suggest that wouldn't be the most cost-effective way of paying staff members, because with shift work you pay a shift penalty, and it applies for all hours worked within that shift, provided it's ordinary hours. So if you it would cost you more than obviously rostering someone as a day worker, and then paying some overtime if there is a need for them to work longer. But if once you start planning hours, and planning out staying beyond the hours of day worker, then that implies that is shift work. So we put these shift types into a summary table to make it clearer. So afternoon shift, any shift finishing after 6 p.m. and at or before midnight, as I said. Night shift finishing after midnight and at or before 8 a.m. So the key is determining the shift type is basically what time the shift is rostered to end. There is still overtime in relation to shift work, so we still have the limit of 10 ordinary hours in a day or 38 hours in a week. Shift workers can work any day of the week in ordinary hours, whether they afternoon or night shift workers, permanent night shift workers. But the Saturdays and Sundays they pay a penalty rate, weekend penalty rate for working weekends. And the penalties that apply for shift work is 15%, you can say 115% for afternoon and non-permanent night shifts. And then on the weekends, they get a penalty rate. Important to note that shift loadings don't apply on top of each other. And and they don't apply sort of on top of weekend penalty or a public holiday penalty. So if they work a public holiday, public holiday, they get 250. If they work a Sunday, they get 200. If they work, Saturday shift, they get 150. The shift penalty falls off because the higher of the two applies. So yes, they don't stack on top of each other. There are some benefits of shift work, and that is that it can reduce your wages bill because it is more cost effective to roster workers as shift workers as opposed to day workers with a lot of overtime. Um, they can work the ordinary hours over a wider span of hours, and it basically enables you to get work done outside sort of day hours. So it increases the span of time to get vintage tasks done. That's why it is quite popular during the winter season for staff working, say, in cellar or in vineyard. But there are some costs attached to shift work. One is obviously that you pay more per hour in that you pay a shift shift penalty, which is obviously greater than day work, but it's less than overtime hours. And they also get a paid meal break. So day workers get unpaid meal breaks, shift workers get a paid meal break. Um, you also need to look at whether or not you roster people as shift workers or day workers. So if the majority of the hours worked by a person falls within the day shift, so within 6 to 6, then obviously it would be more cost effective to have them working as day workers and occasionally work overtime, but you wouldn't plan it out. So if you have an employee who works until 7 p.m. but starts at say 10 a.m., um, then it would cost you quite a lot for that benefit because you pay 15% um, for all hours worked within that span. You would be probably more cost effective to have them working as a day worker between uh, 10 and up to 6. And occasionally, if there's overtime, you pay that off as overtime, as opposed to paying 150% for all hours worked within that span. So I would say, in terms of benefit, it is a lot more beneficial if the majority of the hours fall outside the span of a day worker. I'm now going to take a short break, and we will move on to the second part of the presentation.